I want to talk to you about 10 credit card costly mistakes to avoid right now. You want to start thinking about those mistakes right now. So here are the steps I really want you to pay attention to. The first one is paying late. Never pay late your credit card charges, because the whole thing is that there is a whole constellation of things that actually kick in if you pay late. So, and this is actually the worst mistake. Okay, so whenever it happens, if you're having problems, you always want to pay the minimum payment. Make the minimum payment every month. It's probably like 1% or 2%. If they ask you to pay $25, just pay it. Even if you owe like a $1,000 balance on the card, you want to make the minimum payment. That's why we tell a lot of our viewers, when you receive your credit card bill, what you want to do first is you want to make the minimum payment. Let's say you receive your credit card bill today, and the first of the month, you want to make the minimum payment right now, and then later on around the due date, you can make the additional payments. Okay, so paying late is the worst case scenario for you, and this is the first costly mistake you can easily avoid, and you can avoid this by having something automatic. So if, let's say when you receive your bill, you just make the payment right away. The second thing is making only minimum payments. This is another mistake that we actually seen, and this is not really good for several reasons. Number one, you are accumulating credit card interest charges. So if your APR is currently like 20% or 25%, and you are actually making only minimum payments, you are basically paying a lot of interest. To go back to my earlier example, let's say you actually have a charge of $1,000 on your card, and the bank is telling you the minimum payment due is $20, and you pay $20 only. Imagine now you have $980 in outstanding balances, and you have to pay 20% annually on that amount. So this is not really good. And so when we talk about, so this is the second mistake, and the reason why this is a big mistake is it's not just it's not bad for the fact that you carry a high balance. It's bad for the fact that you have a high credit utilization ratio. So if you charge, let's say if you have a credit card of 3,000 limit, and you charge 2,000 on that card, and you only make a $100 payment, you have like $1,900 rather, that is open, and that will make your credit utilization ratio very high, which you don't want anyway. By the way, boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. We're going to have a wonderful conversation. So the top 10 credit card costly mistakes. Number one, paying late. Number two, making only minimum payments. Number three, that's kind of similar to number two. In other words, running high balances. So if you run a high balance, that means you're making only minimum payments, right? Because it means that you are living beyond your means. So because going back to my examples, if you have a $5,000 credit limits on your credit card, and you actually are charging, let's say you are charging $4,000 on that card, you only have $1,000 left. So basically, you're running a very high balance, because 4,000 out of 5,000 limits, that's 80%. And you really do not want to have a credit utilization ratio of 80%, because CUR is basically a criterion that credit bureaus pay attention to when it comes to setting your credit score. So do not run high balances. This is really bad. It's a bad idea to carry a high balance or max out your credit card. And it's not just because of the expensive interest you'll be charged. Think about your CUR. Very critical. And the potential lenders take utilization seriously when determining whether or not to actually approve your credit and another credit card, or approve your loan or line of credit. So you want to be around 30%, 35% when it comes to CUR. Do not go above that. The fourth mistake that you make, or you could make, that is very costly, is not keeping an eye on transactions. So what you want to do is you want to make it a habit to check your credit card activity regularly, whether by visiting your online account or reading your billing statement. And so if you see a charge you haven't made, this can be a sign of fraudulent activity. And this can be very expensive if you ignore it. Now, unfortunately, we live in a world where you have a lot of bad actors out there who want to harm people, and you can't avoid it. It will happen. It has happened before. It will happen again. So what you want to do is, your first line of defense against your account is you Of course, if something were to happen, if you report the fraudulent transactions to the bank, they will cancel it. They will actually cancel everything. But it's just a lot better it's better to prevent than to cure, right? So you want to do the policing at your own level to see exactly what's really happening. So you want to have like once a week. Maybe on the weekend, you can just look at your statements and see if anything fishy is on that statement. If yes, you want to contact your bank or your credit card issuer right away so that they can put a stop on those payments. By the way, boss, I want to quickly remind you of today's topic. We're having a conversation about 10 credit card costly mistakes you can easily avoid this year. Another mistake that you actually want to avoid is not knowing your credit card terms. And when we talk about credit card terms, a lot of folks, they're like, yeah, I ain't reading that. There's like the fine print, whatever. And nobody wants to read them. Yes, I get it. But you have to understand. You want to stay on top of those terms and conditions if you want to avoid being hit with unexpected fees and charges. Take the time to read the fine print on your statements. It will give you more information on your introductory rates, balance transfer fees, and any other kinds of charges you can expect. For example, let me give you an example. If you have a 0% APR card, that doesn't mean you will never pay any interest. That percentage rate is introductory and likely only lasts for the first 12 or 21 months after your account is opened. So paying off your balance in full by that date will help you avoid being charged the regular purchase APR. Another mistake you should avoid is choosing a card that doesn't fit your lifestyle. Sometimes people actually hear stuff about credit cards and they love how the card looks like. They love how like the sort of I would say appearance, the sort of cliche, the kind of status that card ascribes to them. So for instance, if you have the Chase Sapphire Reserve, it means you have made it. It means that you're rich. So, but the question is, does that card fit your lifestyle? If it doesn't fit your lifestyle, you just waste your time and you're just wasting valuable rewards currency. So not all credit cards are created equal and they all serve different financial goals. So if you're planning to get a new card, make sure you do your research on the best options for your needs and lifestyle. And if you have a family, you want to make sure that the new card will actually suit your family's needs and requirements. For example, if you are new to credit, you want to look into student cards if you qualify, or secure credit cards. But again, take the time to evaluate each card on its own merits. For instance, there is rarely ever a good reason to get a secure card that charges an annual fee. So this is an important element to pay attention to. And if you want to earn cashback rewards, there are cashback cards for all kinds of spenders. The same goes for travel. Some travel cards charge high annual fees but match them with impressive luxury perks, while others are more affordable and better suited for casual travelers. So know why you are getting a card and take your research seriously. Signing up for a credit card is a financial commitment, so make sure you are well matched with your new plastic. Another crazy mistake you should really avoid when it comes to credit card, we're speaking here about overspending on your credit card. And so everybody goes through it. I mean, everybody overspends. But the thing is that it's all about financial discipline. It's all about what kind of processes you have internally to sort of identify the overspending and actually stop it, right? Overspending happens to the best of us. It can be easy to lose track of your credit card spending since you're not feeling the sting of money immediately leaving your bank account. And if you convince yourself you can repay it later, it's especially tempting to treat yourself to something special now, right? And the thing is, yeah, this is really good. But again, going back to what I said, what kind of procedures you have in place to actually limit yourself to say, listen, hey, I think here I'm going a little too far. If you do not have those procedures, then you have to pay attention to overspending. And it's easy to see how this type of overspending can quickly land you in trouble with your credit cards. It's not the only mistake to watch out for. It's also easy to overspend by chasing rewards. I want to go back to that because, for example, when we talk about the Chase trifecta, a lot of folks are really, think or either the Chase trifecta or the Citi trifecta. So basically, you're chasing rewards. You are spending money. You're using different credit cards, and you're spending money to chase those rewards. The question is, do you need those rewards? Do you need it? So what kind of lifestyle do you have? Because earning rewards should really be about getting something extra for the normal shopping you are already doing. The key word here is already doing. But when you start to make purchases simply to rack up the rewards, you're not really gaining anything, and you can land yourself in hot water. And so think about it. If you normally spend, let's say, $1,000 on a card that offers 1% cash back, you will earn $10 in rewards. I said $10. But if you spend $1,500 and justify it by telling yourself the extra rewards will make doing so worthwhile, you risk adding $500 to your card's balance just to get an extra $5 in rewards. So think about the implication of that. And this is just one very simple example. I mean, I could multiply the examples like galore, but yeah, be very careful here. So do not overspend on your credit card. By the way, boss, I want to quickly remind you of today's topic. We're having a conversation about the top 10 credit card costly mistakes you can easily avoid this year. Another mistake that you need to avoid is applying for too many credit cards at once. And this is kind of tempting because the thing is, you're trying to, like, you find one credit card, let's say one travel rewards credit card, then you have another credit card that gives you cash back. And so you have a third credit card that allows you to earn, like, to sort of have earn up rewards in certain categories. And you're trying to apply for anything at the same time. This is really bad. Okay. So on the topic of credit card rewards, earning extra perks for your regular purchases can be a great feeling, but that doesn't mean that you should rush out and try to get all the cards you want at once. Each card application triggers a hard inquiry on your credit report, which, when you really think about it, can knock off a few points your credit score. So when we talk about a few points, it can be five points all the way to 15 points, depending on what kind of credit cards you go for. So imagine if you were to apply for 5 credit cards, we're talking potentially 75 points of your credit score. And if your credit score is already low, let's say you're probably like around 500 or 600, having 75 points knocked off your credit score is really huge. And the thing is, one hard inquiry wouldn't do much harm, but multiple inquiries add up. They do add up real fast. Plus, lenders may see this behavior as a red flag if they assume that you are seeking access to multiple lines of credit at the same time due, for example, to financial distress. That's why it's best to be strategic with your credit card applications and space them out over time. So what we tell our clients, or tell our viewers also, is to space them out like every 3 months, for instance, or every 6 months. So when you think about if you want to maximize rewards, if you want to access rewards, credit card rewards, that is, you want to actually have a plan. So for the whole year. So for the whole year, you can plan out your Chase trifecta, your CD trifecta, your Bank of America trifecta. Like, you can plan those things over the year so that you apply a specific time during the year. And what I want to say here is that, generally speaking, it's a great idea to wait at least 90 days between credit card applications, though waiting at least 6 months between applications leaves even more time to the negative impact of each hard inquiry to fade from your credit report. So if you expect you need a loan for a major purchase, such as a house or car, in the near future, you want to be even more conservative, if not avoid new credit card applications entirely. Another mistake that is very costly when it comes to a credit card costly mistake, we're talking about canceling a credit card. And really, this is something you never want to do, because you really want to pay attention to the fact that, first of all, credit history, the length of your credit history is part of your credit score. And so, accounting for 10 or 15%. And that's important. So let's say you have had credit since, for the last 5 years, it makes a huge difference versus the last 10 years or last 15 years. So you never want to actually cancel a credit card unless they're charging you some sort of crazy fees. If they're charging you fees, then you have to think about, because there are some what we call second chance credit cards that charge you fees and annual fees, whatever. If that's the case, then you want to cancel them out. Yes. If the idea of carrying a balance or running up interest charges sounds stressful, you may be wondering if it's a good idea to just pay off your debt and close your credit card accounts. But before you cancel your cards, be aware that doing so may shrink your overall credit limits, increase your credit utilization ratio, and impact the average age of the credit lines on your account, all of which can hurt your credit, right? So earlier I was just talking to you about the length of credit, but you have other stuff. You have the CUR, and you also have the fact that you basically are shrinking your overall credit limits. Imagine that you have two credit cards. One that's been open for 5 years and has a $5,000 credit limit with a $1,000 balance, and another that's been open for 2 years and has a $2,500 credit limit and $2,000 balance. Now, say you decide to pay off your older credit card, and basically what will happen here is that your total credit limit will decrease from $7,500 to $2,500. On its own, this may not be a problem, but it will impact your utilization ratio. But if you pay off your older card without closing it, your CUR will be 26.7% based on a $2,000 balance and $7,500 credit limits across both cards. If you close the older card, however, your utilization ratio increases to 80%. Think about it, 80% based on $2,000 balance and $2,500 credit limit on your remaining card. In addition, the average age of your accounts will decrease from 3.5 years to 2 years. And since the length of your credit history accounts for roughly 15% of your FICO score, this can cause your credit ratio to actually to decline. Okay, so instead of closing your card, a better option may be to request a product change from the same credit card issuer to get a product that better matches your financial needs. For example, if the account you want to close is an annual fee card that doesn't offer you much value, see if you can downgrade to a no annual fee option. Another credit card costly mistake you can easily avoid is not requesting credit limit increases. A lot of people, once they have a credit card, they're very happy, blah, 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 blah. They never talk to the credit card issuer anymore. This is really important to actually talk to the credit card issuer and ask for credit limit increases. And this goes back to what I said earlier about credit utilization ratio. It also has to go back to what I said about your average, your overall credit limits. And so it's important. And the thing is, as you can see from the earlier example that I gave you in terms of 20% versus 80%, having access to higher credit limits can decrease your credit utilization ratio, which may improve your credit score, assuming your spending stays the same anyway, though. Okay, so it's important. So the thing is that you can request credit limits like at least every 6 months, and unless your credit card issuer increases your credit line automatically. So if you do this like twice a year, this can be a great way to maximize your credit rating, and that's what you want anyway. But again, be sure that increasing your credit lines doesn't also increase your balance. Otherwise, you will negate the benefits of doing so in the first place, right? It's like, let's say you currently have $5,000 in credit limits, and you request your Chase card to go to $8,000 limit. But on the $5,000 limit, you were actually keeping the $2,000 sort of outstanding charges, and now Chase approves your $8,000 credit limit increase. So now your new limit is $8,000. But instead of keeping your outstanding charges to $2,000, you actually increase the charges to $5,000. So you really are negating the effect. So it's important to pay attention to your overall spending. So one thing I want to say here is that, it's important to understand that credit cards can be a great complement to your overall financial strategy, enabling you to earn cash back, travel rewards, and other perks on your everyday spending. That said, credit card debt can be a slippery slope that quickly grows unmanageable if you're not careful. So by avoiding the mistakes that I just gave you in today's conversation, and continually educating yourself on financial best practices, what will happen here is that you will empower yourself to stay safe with credit cards and enjoy all the rewards they can offer. So I want to quickly just to sort of recap here that tell you that the top 10 credit card custom mistakes you can easily avoid. Number 1, paying late. Number 2, making only minimum payments. Number 3, running high balances. Number 4, not keeping an eye on transactions. Number 5, not knowing your credit card terms. 6, choosing a credit card that doesn't fit your lifestyle. 7, overspending on your credit card. 8, applying for too many credit cards at once. 9. Canceling a credit card. And 10. Not requesting credit limit increases. Thank you so much for your attention. I really appreciate it. God bless you. I'll see you next time. But until then, remember, stay marvelous.